Hey everyone, Brian Bogner here, along with Jordan Roberts here at Parallel Financial, and we want to take the next few minutes and talk to you about tax-smart charitable giving. Yes, it is that time of year. It's the end of year here in 2020, and these are 5 things that you absolutely need to know. And who is going to be doing the presentation is Jordan Roberts. He recently joined the firm here at Parallel. He also has a legal background, very, very, very smart guy, knows about this stuff inside and out. And so without further ado, Jordan, take it away.
Thanks, Brian. And as Brian mentioned, we're going to go through 5 things that you need to know today, towards the end of the year here at 2020 as you're trying to make your charitable gifts. So first thing is the Secure Act. You might have heard about that. Congress passed it at the end of 2019. That increases AGI limits for charitable giving in 2020 only. Next, you can do qualified charitable contributions to absorb your RMDs this year. Number 3, you can lower your effective tax rate by moving income out of a higher tax bracket by making a charitable deduction. Number 4, you can make an above-the-line $300 deduction if you are going to take the standard deduction this year. And then finally, you probably already heard this, but there are no required minimum distributions in 2020. So first item here, AGI limits. The Secure Act increased AGI limits for charitable contributions to 100% for individuals this year, and to 25% for corporations. So last year it was 60% for individuals. This year it's 100%. For corporations last year it was 10%. This year it's 25%. So if you are a business owner and maybe you sold your business or your business had a high year of revenue, this could be a year to go ahead and take that deduction while the limits are high.
So if I made $100,000 this year, you're telling me in my income, I could donate the whole $100,000 to charity?
You can, as long as that's a cash gift to a public charity. Okay. You can distribute all of that to a charity if you want.
All right.
Second item, qualified charitable distributions. What these are is when you take money directly from an IRA and you give it directly to a public charity. And what this does is it lowers your AGI and it lets you avoid paying income tax on that distribution. And it also can affect Social Security taxation. So if you are charitably minded and you plan to give money to a charity this year, don't take it out of your IRA into your bank account and then to the charity. Do what we call a qualified charitable distribution and send it directly to the public charity. Third, marginal tax rate. Here, if you are charitably minded, what you can do is if you have a little bit of income in a higher tax bracket, and this is where it's important to work with your financial advisor or tax professional, because you'll want to take a look at your income and see what you have in that higher tax bracket, and then consider giving that amount to a charity to lower your effective tax rate. Finally, if you claim the standard deduction, so in other words, if you do not itemize on your tax returns, just for 2020, Congress gave you a $300 above the line deduction. So as you're filing your returns next year, make sure that if you gave at least $300 to a public charity, make sure that you have this item on your return. And finally, you've probably already heard of this, but great news, the Secure Act says no RMDs in 2020. So hopefully you haven't already taken those, but if you still have some left that you were thinking you're going to have to take, you do not have to take those in 2020.
All right, so in review, Jordan, the 5 things, okay, we've increased adjusted gross income limits 100% for individuals, which is a big deal. If you don't need the money, you can donate it and not pay any taxes. We talked about the qualified charitable contributions, or excuse me, distributions, a little typo there, but that's fine. Qualified charitable distributions, which basically means if you're pulling it out the IRA, you can put it right in to a charity and it won't affect your adjusted gross income. Obviously, you can lower your marginal tax rate. That's always a good thing. That $300 deduction is going to be great for people taking the standard deduction as well. And if you have an IRA and you're over the age of 70 and a half or 72, depending on when that is, or if you've been taking them, you don't have to take your required minimum distributions for 2020. So that's a good thing there as well. As with all the things that we talk about on these videos, if you have any questions, or you want to talk further about what this means to you personally in your personal situation, here's Jordan's contact information, his email address, his phone number. Give us a call and we'll be happy to help you. Thanks so much for listening. Have a great day.